microphone wasn't working. I was tapping on it and there's no sound coming out. And now it is. Hello, how we doing? Afternoon. Sorry about that. I was really unorganised. Afternoon, Callum, Steve, Virginia, Paul. Happy Thursday, crew. Right. Sorry. Thrown me. That has microphone going wrong. Right. Hang on. I'm nowhere near ready yet. I need to get back. Hang on. One sec. Fundamentals needed. When you're ready. Right. So it's Thursday afternoon. Afternoon, Fletch. We'll have a look through the news, do the usual stuff, trade the open. A little bit concerned about the open today. We've had ADRs across the board all over the place today off the back of the US dollar news. So DAX this morning was a beautiful clean break. So I got out at 3R as usual at the moment because I'm not going for big moves. So yeah, nice easy clean break up to 3R. Trading stop got out on the second position, and then obviously we've rallied up to somewhere around about 7R. Basically, we've hit ADR today on the DAX. So all-time highs gone on the DAX. FTSE was very much the same. Had a nice clean. Actually got hedged onto the FTSE this morning. As I was watching the DAX break, I closed the short positions on the FTSE, somewhere around there, and then got out for a break even on the FTSE this morning. That has also hit ADR high today. So you can see with all the indices today, we've had big rallies. So looking at New York, New York pre-market has done 125% of ADR on the S&P. We're just shy of ADR on the Dow, which is that previous level. And we are just over ADR on the NASDAQ. So absolute screamer today across all the indices. Usually when you have days like this, before the market opens, the open can be very contracted. However, there are days like this where when the market opens and the bell rings, it just flies. So I'm going to trade the open as usual. I've done 400 odd this morning on the DAX. So taking the FTSE off the DAX 400. So I'm happy to trade them today. I'm not going to trade the S&P. I've decided to scrap the S&P. I'm going to keep it up there so we can see what's going on, but I'm just going to trade the Dow and the NASDAQ because they're unconfluenced. Is that even a word? Uncorrelated even. So yeah, we'll see what happens at the open on those. But yeah, always wary about days like this where you've had such a massive move. The market tends to be exhausted because all the volume that's going to go in at the open is entered during the Globex session. So you tend to get a lot less volume coming in at the open because they've done a load of it. Typically happens on news events, earnings, that sort of stuff. So we'll see how we go, but you just never know. FX-wise, loads of ADRs. We've got few RSIs in there, but we are undoing a lot of the moves that we've had. So we'll go through all the FX stuff in a minute. So yesterday I wasn't here. I was up in London yesterday on day out, which was very nice. Very hot. 28 degrees in London. Hot. Wouldn't want to be in London anything over 30. It'd kill you. But anyway, so afternoon, everybody else. Haven't said hello to Crum, George, JC, exoupdate.news. Yusuf, how you doing? So yeah, yesterday we had the CPI for the Australian dollar coming out bullish. So the Aussies were at 3.8. They were forecasting a almost 0.5% drop. What they actually got was less than that. They still got a drop though. So they didn't quite get the forecast. The year on year came out slightly higher than anticipated. So it's not updated. Why is that not updated? Weird. Let's check that. So yeah, we're sitting at oh, that's quarterly, isn't it? It should update on the yearly. I have to check that. So yeah, so basically with the Aussie yesterday, there was a bit of a spike, but not a massive amount of movement if you look at the Aussie pairs. So yesterday we got the news event there and they just undid it. So nothing particularly exciting happened with the Australian pairs yesterday. So yeah, kind of a non-event, that one. We had the crude oil inventories in Wally yesterday, so that was it. This morning's German CPI figures came out as negatives. So the combined CPI has dropped. They were forecasting a drop. They got a bigger drop than expected. So that will put a lot more pressure on Lagarde to drop interest rates. So I suspect, I think it's the week commencing the 10th, I think. Yeah. So it's this Thursday, the 12th of September, 2 weeks away. I suspect we're going to see a drop in those interest rates on the euro. So that's obviously dropped the euro a fair bit this morning. As you can see, we've had a big collapse on that euro. So yeah, big moves down into ADR. Most of the ADRs we'll look at in a minute are the euro pairs, but it is kind of recovering that as well. So although it is a knee-jerk reaction, we are getting some upward tick on it now. So I think the market has already factored in a lot of that movement with the euro for the last week or so. We've kind of paused a little bit on most of the euro pairs. I got out of my euro US dollar yesterday. Posted that in Telegram today. It's the only one I got out of yesterday, euro US dollar. So of course today it tanks. Anyway, that's the way it happens, isn't it? So yeah, so some movement down on the euro this morning, and that would indicate we're going to get sustained selling on the euro. Although we'll have to wait and see what Lagarde does. There's nothing come out on Financial Juice really about it at the moment. And we've had the GDP figure and unemployment claims for the US this afternoon. We've got better than expected GDP. So although we're going to be dropping those interest rates, the economy is doing well. So with the US dollar, you've got this battle between, yes, we're going to drop interest rates, which is going to weaken it, but the economy is doing well, which is going to strengthen it. So again, a lot of chop, and it's very, very difficult to predict directional bias long term on this US dollar because these figures keep changing. They're not very good with forecasts at the moment. None of the central banks are, but the Fed particularly terrible. So, you know, they go, oh, you know, this CPI number's coming down. We've got to drop those interest rates. Oh, GDP's doing really well. So, yeah, maybe we'll just do 0.25 instead of 0.5. And then they'll change their mind next week on something else. So that was uptick for the US. So if you look at the US pairs, we've had a decent uptick today. Got out of some US dollar CAD yesterday as well. Did some drawdown control on that one. So that US CAD, whoops, don't need to go that far back. That was the initial entry taken on the US dollar CAD. Second entry was taken there. So basically I used this aggressive drawdown control position from Tuesday to reduce that by 50%, and also to take that one off as well, because I had two positions too close together because I took a manual. So I just did a bit of DD control yesterday on that one. But yeah, nice uptick today on the US. So if you look at the US pairs, nice movement to the upside. What that old line is, it's an old chart. And the pound US dollar coming down nicely, and the euro US dollar obviously we looked at coming down nicely as well. So good moves on the US dollar, starting to unravel that squeeze that's been in play at the moment, which is good, what we want. This afternoon we've got pending home sales at 3 o'clock. Got 4 minutes to the open. We've got Jordan speaking later. So Jordan doesn't speak very often, but when there is noise coming out of Jordan, out of the Swiss, we get potentially movement because they have a habit of just dropping things on us, the Swiss. So you have to pay attention. It's an orange news. It always is when Jordan is speaking, but sometimes stuff comes out of that and you just think, wow, that was out of the blue, and it suddenly goes crazy. So don't forget, the Swiss National Bank have come out in the last couple of months and said, we are now going to start manipulating the Swiss ourselves if we deem fit. I.e., we will buy a load of or sell a load of Swiss whenever we fancy. We'll do the same as the yen. We'll just pump it or dump it. And we won't tell you. It will just happen. So market's interested, much more interested at the moment in what is coming out of the Swiss National Bank. Euro CPI flash estimates tomorrow, and GDP for the CAD and PCE for the US. But that's it for today's news, really. Pending home sales doesn't really do a lot. So I wouldn't expect a lot of movement out of that. 3 minutes to the open. So we'll watch what goes on at the open today. Bit of gap going on the Nasdaq pre-market there. Look at this volume coming in. 2 minutes before the open, we've got a load of volume hitting already. Might be a big one. Afternoon, Champagne. Afternoon, Harold. Don't forget to do that. John, you're out of sync again. Busy filming the next John Wick film, so we'll give him a break. So yeah, today obviously everything is kind of rallying at the moment. Obviously, with that US dollar potentially strengthening up, that might put a little bit more downside into the open today. So we'll see what happens. But Dow, ADR, very, very nice. That level up there we've got coming up. So that is Monday's high. So that's the high of the week that we got potentially as a target today, which is the previous month's high as well. So that's last month's high, which we double topped on Monday. So this is the second knock on the door. However, we are going to be extended at ADR by the time we knock on that door. So the market has had a hell of a run and a stretch to get to there. By the time it gets there, I don't think it's going to have much legs left. So if it does break out at that level, I suspect we'll get a fake today. But we'll see. But yeah, Dow, it's probably going to hit it pre-market at this rate. So yeah, that big level coming up there. So get prepared for shorts on the Dow. Pre-market high has just been taken out. Nasdaq, we got loads of room to the upside. We're already at over 100 ADR, and the S&P we're at 100 ADR as well. 100% of ADR. So, but as you can see, we've got more upside into the previous day's highs as well at 150. So a fair bit of volume coming in. So already triggered along on the Nasdaq. Very jittery open today. This is what I worry about on these days where we've had this big movement. It's really unpredictable because the market's done its direction for the day. So the orders coming in tend to just be bleh. No real structure to it, but we'll see. At the end of the day, it's a 50-50 shot, a break. So it either breaks and is profitable or it doesn't. So so my breakout long this morning on the Dow is going to be a break of ADR, a break of the pre-market, a break of the Monday high, and a break of last month's high. Yeah, there's going to be a fair few limit orders sitting at these levels. So if we get through there, I'll be surprised. But we'll see. There's a hell of a rally today. So, you know, if you look at what we've been doing for the last, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours during Globex, there hasn't been any sellers anywhere. So if they're going to continue that, we should get a decent break today. But it's got to get through all this. All the limit orders are going to be sitting here. It's going to be tough. Nasdaq's broken along. Nasdaq's going for 125 ADR, short on the Dow. S&P's inside bar. This is probably more than a video, isn't it? Afternoon, Ismet. So that this 3 hour sell-off yesterday, that propulsion gap there that started that at the open is potentially a good target to the upside. I'm just going to move my TP down slightly. So that's 125 ADR on the Nasdaq now. S&P just trying to break the highs. It's also the Globex low from yesterday. Look, that's where we're running into now. Wow, what a difference, eh? Nasdaq, massive bull. Dow, massive bear. Okay, closing half. Only because I got 400 bank from this morning, so that's another 160 in the bank. The Dow I'm going to let run because this is limit order triggers at that high. You know, it's like I said, you've got multiple levels here where there's going to be sell orders placed. The rally beforehand had no chance to get through there. As you can see, they just sold it straight off. So limit orders triggered up there. Here come the sellers basically to unwind this move. So I'm going to let that run. That's a hell of a opening candle though. I'm going to close half. All profit today, isn't it? One of those days. Beautiful. 1,200 quid. I'm going to leave TP2 here. I mean, this is going to be almost 175 ADR. That's, I mean, days like that are few and far between. But it's trailing at 2R, so I'll more than likely get taken out on the trailer before we hit that. But I suspect we've got some US weakness coming in. It's US strength, look. Market's totally uncorrelated today. So we've got US dollar strength coming in at the same time as we've got index strength coming in. So that index strength, I imagine, is a buy on Nvidia or something like that. The Dow obviously is dropping, which is what you would expect. When you get US dollar strength, you expect the indices to go the opposite way. So we're just running back into this weekly low at the moment. We've got some orders triggering, which is last week's high. So that's the high last week on Friday. So we just got some limit orders triggering at that level. As you can see, this is an area it's been of interest this week a few times. Nice open. We'll come back to that in a minute, but it's all locked in, so can't lose. If you are trading the S&P, you've broken long. So the opening range breakout is the pre-market opening range breakout is triggered. Your opening range, which is there, might have triggered, but depends how far your offset is. You still didn't get your mic drivers sorted? Don't know. I haven't looked really, to be honest. Logitech G Hub. Let's have a look, see if they fixed them. Nope, they haven't fixed it. Nothing I can do. You can't roll the software back. That doesn't work. This is what drives everything. Everybody's in the same boat. There's support tickets all over the place saying it doesn't work. They haven't fixed it. So it works. Everybody can hear me. Just the sound quality probably won't be as good. Nothing I can do. Afternoon, Mark. Right, so let's have a look at FX while we're waiting for this lot to play out. So ADRs today, there's a lot. We've got some weekly range hits as well. So Euro CAD is the most noticeable weekly range. So that's not Monday. That's Monday. So obviously it's been selling off all week. We've had 3 down days. Today is day 4. So we are 125% of our weekly range. So nice hit straight into the monthly levels today and bounce. So if you go back out, that is the 2-month high, sorry. So that is the 2-month high, this level here, which we tapped into, same level as we hit last time. So just be aware of this. Obviously, if we are going to form a range, that's probably where we're going to form it from, because after that breakout of the previous range, this is what forms support. We're back there. So pretty good chance that this might be a level that we're going to bounce from. So potential push up basically into there. And it's obviously going to depend on what happens with this US dollar and this Canadian dollar. But nice little reversion opportunity. Lovely big wick just gone in on the hourly. So I pushed down hard today on that news. We've just put in a beautiful hammer. So sellers tried to make a new low at 125 ADR. Buyers having none of it. So likelihood is we'll see some profit taking potentially start here. But we're going to see what happens with that US dollar this afternoon. It seems to be fairly strong, which means the Canadian will strengthen and that will keep pushing down a little bit. But beautiful level coming up. There's a few other weekly ranges as well being hit, but they're all ADRs, pretty much all of these as well, apart from the euro pound. So euro odd, also an ADR, 150. Beautiful bounce off of 150 there. 5-minute reversal alert. So there's your drop today down into 150 ADR. There's your reversal alert that's gone in. You had a previous reversal alert which went in here. So that was the high there at ADR. 125 ADR. Down. Yeah, so that would have been a reversal alert there. And it just got invalidated by that wick. So that's your second reversal. So first one was actually a slightly better price than the second one, but obviously it's playing out very nicely. So good push up there on euro odd. Euro CAD also extended. M5 reversal alert. Not as pretty this one because of the strength of that news, but there's your reversal alert. Yeah, that is it. So you just got entered into there. So watch for a retest. Euro New Zealand. So all these euro pairs basically. Euro Swiss hasn't hit ADR, but all the others basically pretty much, apart from Euro Pound, have hit ADR today. So your Euro New Zealand, I'm saying all of the others, apart from the Swiss, the Pound, and the Yen. So 4 out of the 7 have. Euro New Zealand ADR. So there was your reverse alert this morning. So if you took that one, you're out by now. And Euro US. Again, nice tap straight into ADR. This one's stuck because we've just had that strength coming back, and it looks like that US dollar's powering up again. That Dow's probably coming down even faster. Yeah, look, we're over 3R now on the Dow. So I've got another 2R locked in off the back of that propulsion move. Just got another 1R locked in on the NAS. Starting to run into a little bit of traffic on the NAS now. Just going to close that second half out. So that's 2R, two 2Rs there. I'll leave the Dow to run as the US dollar's rallying. S&P, if you did take that, you might well get hedged on that. So yeah, Euro US dollar obviously pushing down at the moment, but that is an ADR hit. It's not as extended as the rest. You got some pound extension. I mean, there's loads of extensions. You can see them all here. Most of these are off the back of the US news, so or the Euro news. So the CAD Swiss, big rally up there. Canadian strength, Euro weakness. Obviously, the Swiss franc tends to weaken with the Euro as well. You have just had a reverse. Oh no, you haven't. So you haven't had a reversal alert on that one. You're not going to get anything anywhere on that one with a reversal alert. That news was too spiky. So I'm flicking around a little bit here. I'm just looking for the good ones. Aussie, New Zealand. So that's done ADR in both directions, isn't it? What's ADR? 53. Yeah, so we got an ADR hit to the downside this morning. So that was the Asian session ADR reversal. Now you've just hit ADR to the upside. So we've done 53 is ADR. We did 67 down, and we've done 73 back up again. So 100% retracement back to origin, and now we're reversing back down again. So you've got 2 bites of the cherry. Very rare you get 2 ADRs. If you hit ADR, the chances of you getting back and doing a whole ADR in the opposite direction virtually just doesn't happen. As today. So Aussie New Zealand, another opportunity there. Aussie Swiss, you might find the same with that. No, it's gone the other way. So Aussie Swiss, ADR hit to the upside. You've just had a reversal alert there off of 125 ADR. So potentially watch for a pullback and drop on that one. And then look for a target somewhere down here. US dollar Swiss as well. Not as clean. Too fast that move on the US. So yeah, there you go. There's your ADRs. There's loads of them today. Loads of RSIs to look at as well. So I think what we'll do is we'll whiz through those RSIs. Let me just quickly see what the Dow's up to. So we've got propulsion gap candle potentially forming here. We've got another 15 minutes on this hourly candle. Watch this propulsion gap for an additional buy on the NASDAQ. Dow's not letting up at all. Lovely day today. Afternoon, Mimo. How's the multi-currency hedge going? It's not at the moment. It's wrong. It's wrong, basically. I need to build an EA for it. It's too complicated to do manually, basically. I haven't got a product that does it at the moment. So Price Action Toolkit and the Position Trader EA, it cannot calculate correctly the lot size required to hedge. So I need to build an EA basically to test it properly. What I was doing while I was testing the strategy was taking a trade in one direction and the other direction with exactly the same risk over ADR. And then after the outcome of that, I was then repeating the process. What I should have been doing was not repeating the process with the same risk over one ADR. I should have been reducing risk on the one that had the lots left on it. So I haven't got an EA that does that. So I need to build an EA basically that will look at the open positions on the opposite currency and calculate the correct lot size for it, basically. So it doesn't work the way I've been doing it. It does work. I mean, it's locked in the hedge, and it's not hurting. But I'm locked into a hedge, which basically all I've done is I've turned the hedge into a position trade, which that's not the point. The point is to get out of the hedge. What I've done is made my pound US dollar short massively profitable, and now I'm going to have to position trade out of the euro US dollar. Yeah. So I've got a load of profit here, which I can use, but what I need to do is close all this profit out today and then use this to close that and work out the hedge. So you've got to, these lot sizes are way out of what they should be. So it needs work. I know exactly how to do it. I just haven't had time. So I'm resetting that. 4-hour on the Dow. There's the buy coming back in on the NASDAQ, potentially. So if this forms an inside bar here, you've got potentially a rebuy, 2.5 minutes left. See if they break that 5 minute. If they stay inside that 5 minute candle, basically the bulls are holding the bears back in place with that buy order. So we should get a springboard up. Might just go, but propulsion gap on that 3-bar reversal at the open in Globex. Okay, so this is where they bought this morning. Yeah, that's where they started this buy rally. So watch this area here. They may well buy this out. Look at this. This is nuts. ADR to the upside, followed by virtually, was it 80% of ADR? in 30 minutes. Can't say it's not exciting, can you, today? Just going to close that out. So just locking that in. So nice day, £1,300. There's your springboard off of the propulsion move on the Nasdaq. All done. Easy, isn't it? What levels are you looking at to target the EU and GU? I'm out of EU. Got out of that yesterday. My target was here. So that was my target. But the reason I closed all this out at the end of day yesterday, two reasons. First was we hit 150 ADR yesterday? 79, 125 ADR, something like that we hit yesterday. So we were massively extended. It pulled back and then it double bottomed. So you can see where I got out. I got out here on that candle. So we basically double bottomed and the bull started to come back in. So I exited there. Second reason, we completed the propulsion gap. So it's a return to origin play. So if the buyers were going to add in to this leg, they got overwhelmed yesterday. If they were going to add in, which they did, that was where I'd expect it to come from. However, the news obviously today dropped it the other way. Yeah, great example of why technical analysis is not as important as fundamentals. Yeah, so any system or strategy that you use, which is based off of technical analysis, will be trumped by every news event, which is why it's so important to pay attention to the news events. Yeah, so if the news today was not negative on the German CPI numbers, this could well have rallied up and retested those highs. But the market flipped direction because they then had much more inclination of an interest rate drop from Lagarde in 2 weeks' time because the CPI had confirmed what is potentially going to happen. So this technical buy or exit for me there was based on this is where the buyers would enter, and they did. But the buyers changed their mind because the news changed their mind for them. So technicals, absolutely great if there's no news. If there's news, forget technicals. They're useless. So target to the downside is, again, if that is your first buy and that is your second buy, that's where the buyers stepped in previously. So that's my target to the downside. That's where my target was. But ahead of CPI numbers, I got out. Wrong thing to do. But if these CPI numbers had come out positive today, I'd be sitting there going, aren't I brilliant? I got out exactly the right spot. Do you know why I got out? Because of that. And the CPI numbers confirmed what we thought. It's a buy, but it's not. Nothing to do with technicals. So you place your targets where you think the price is going to go based on what is the current situation now and what your P&L is looking like. I quite fancied having $3,500 yesterday, so I took it. That's the only reason I took it. Pound US dollar, however, I'm still in. So I did partial drawdown control on this one yesterday. So that was my first entry there, which was closed. No, sorry, that's not one of the partials ones. So that one closed out yesterday with a loss because that was the 6th position. Aggressive drawdown control entry was taken yesterday, which pushed down. So I took the aggressive drawdown control off at these lows and did drawdown control by reducing 50% of that position. And I closed that one out at a complete break even. So the aggressive drawdown control allowed me to close 50% of that and bank $1,000. So I'm still in it. Downside targets at the moment are here for that entry. But, you know, I'm looking for a pullback, basically. So somewhere around here or a 50% retracement on the leg in case that happens. Again, you know, this is all based on technicals right now today. So technically, that is last month's high. Technically, you'll find limit orders there because that's what markets do. They buy when you get a breakout, they rebuy the breakout. So that's where the limit orders from the banks and institutions will be sitting to go long. There's also limit orders sitting in this area because that is where the propulsion move started, and they've already bought that twice. Now today, they are struggling again to get through it. So we know there's a hell of a lot of buyers in that space. So if we break this level, where are we going next? Where the next load of buyers are going to be? If they get overwhelmed, we're going to have a 50% retracement. None of that means anything if the pound and the US dollar have news events which make them more bullish or more bearish than anything else on the planet. So right now, technical levels are here and a retracement. Whether or not that happens will depend on the news that comes out tomorrow for the US dollar. But that's where I am now. So right now today, I'm looking to take out more partials on this. So I'm going to close that position out. I will also close out 50% of that trade, leaving my average somewhere around there. And I'll be banking profit. So I'm just scaling out in the same way as I've scaled in. But as I said, it all depends on what happens with the Canadian GDP and the PCE tomorrow, doesn't it? We've got no news on the pound. So we'll see what happens with those. Pound CAD. If there's any pairs you want to look at, let me know, because I'm just going to run through the RSIs today. I'll do a full look at everything tomorrow. Pound CAD, not in it at the moment. Just get rid of the last weekly. So it's a double top off the monthly. So again, limit orders triggering at the highs. We didn't get the breakout. We got the reversal alert. So there's your structure. Is now bearish. So there's your reversal alert. There's your retest. There's your lower low. There's your lower high. There's your lower low. There's your propulsion gap for the lower high. Looking for a 50% retracement on that leg. But it depends where it goes with the Canadian tomorrow. So the CAD tomorrow is obviously going to drive this one because there's no news on the pound. So if we get strong Canadian news, we'll find we'll be down here tomorrow. If we get weak Canadian news, we'll probably be up there. But, you know, this is a big, you know, it's a fairly big leg. If you measure these two legs, that one is about 30% bigger than this leg here. Obviously, if you're going to hold market structure, low, high, higher low, higher high, higher low, higher high, double top, higher low, it's going to be somewhere in this area, isn't it, that we're going to pull back down into. So if your bias is long on the pound, you want to be buyer down here somewhere. But we've had nothing out of Bailey. It's bearish because we're reducing interest rates. However, we've had no more news from Bailey as to when we're going to reduce interest rates next, or indeed what it's going to be. Highly likely it's going to be a 0.25 again. Whether we get it in September or not, we'll have to wait and see, won't we? Canadians will fall in line with the US. As much as they say we're not going to fall in line with the US, they will. And the US is dropping interest rates in September, so I'd expect a second drop on the CAD. So that will be bearish, meaning that makes that bullish. So if we get a freeze on the pound interest rates and the Canadians drop with the US, you want to be buying to go long at some point. But obviously the GDP to figure, if that's forecast to drop tomorrow, if that comes out bullish, that pound's going to rally. The Canadian's going to rally, so obviously that's going to drop the pound CAD tomorrow. New Zealand yen. So yens, I'm not doing anything with the yens still. So bear with me 1 second. Your guess is as good as mine with all yens. So after the intervention leg, we've gone nowhere really. If you look at all the yen pairs, US obviously is a little bit weaker, although that is probably going to change, I think. Pound yen sideways, euro yen sideways, Swiss yen little bit more volatility but still sideways, Aussie yen sideways. Yeah, New Zealand yen sideways but a little bit more of a breakout. But There isn't anybody on the planet that can help you with this. Nobody knows where it's going next. It's probably going to continue to drop. But how long that takes, if you scroll out and look at a higher time frame, you can see how fast this intervention move was from the Japanese. It's the fastest intervention move we've ever had, ever. There is no precedent for what happens after an intervention move of this strength. So it's a case of, I think most analysts, from what I've read, and most market participants are bullish on the yen. So they, I suspect, are waiting for some kind of decent retracement on this leg. However, this is not normal price action. So normal institutional money is made up of different order types. You've got commercial orders, speculative orders, you've got pension fund orders, you've got hedge fund orders, you've got all sorts in there. This is an intervention. So none of this is normal order type. Therefore, you're not going to get normal price action coming off the back of it. Therefore, the only thing I would say to do with any yen pair is to try and trade it intraday, drop down and try and make money on intraday movement. So the best thing to do with the yen is at the moment, forget about that. Yeah. So forget about the cross. Concentrate on the base currency. So is there New Zealand dollar news coming up soon? No. Don't bother with it. Is there any US news coming up soon? Got PCE tomorrow. So try and play some US dollar yen moves off the PCE news, because unless there's news, you're going to, like that, you're going to find intraday it's just going to chop around. So if there's no news, look at the highs and the lows of the previous day and ADR, and maybe take ADR 80% shorts, ADR 20% longs. So as it's getting towards its extremes, its normal average daily ranges, assume it's going to turn around, because if there's no news, there's no reason for it to do anything else. So all the yen pairs, really, they're range bound. But it's not my type of trading, but this is a prime example. Yeah, I mean, it's just not going to go anywhere unless there is a reason for it to do that. We've just had news, which has given it a reason to break out. But what it will probably do is that. So I don't, you could play a baseline breakout on it. So take a break of the range. But I mean, it's not position trading. I wouldn't position trade anything yen at the moment. It's too dangerous, because we don't know what's going to happen. Can you use position trader EA to test stop loss strategies? Yeah. So if you want to use the position trader EA and use a stop loss, obviously it doesn't place stop losses in the market. So you would have to set your drawdown control to true, set it to 100% of the trade size, and then set the targets for exiting. So when you get 1% into drawdown, close 100% of the position. So that is the equivalent of a stop loss. So if you risk 1% over 1 ADR and it gets 1% in drawdown, it will close 100% of the trade out for you. So if you, whatever you do here, you can obviously adjust that, but that's how you. So basically, it's a stop loss that isn't in the market, but it doesn't place obviously hard stops. You just use drawdown control to do it. What stop loss strategies do you use when scalping? I don't do scalping because it's mentally impossible for most people to do. But if you're going to scalp, the usual things are, I mean, I've been doing loads of research of late into market patterns and all sorts of stuff. I've reconfirmed all of my ADR testing that I did years and years and years ago. It's still the same. Somebody else has tested all of my ADR data, come up with the same conclusion, which is nice. But yeah, I mean, it's a case of the same thing. if you're scalping anything, when you hit that button, buy or sell, whichever time frame you're using, the odds of the price going in your direction are 50-50. If price goes in the direction that you've hit the button, yeah, brilliant. Protect it as soon as you can and make sure you close it before it gets towards its average daily range, because 58% of the time, the person that's confirmed my data got 57% of the time, it will not go much further. Yeah, sometimes it will, like today. Yeah, we got ADR hits today, but these are caused by news. Yeah, so these ADR extensions do not happen for no reason whatsoever. They happen when there's a news event. So look at the best scalping strategies I think you can use are looking at what happened yesterday. Were we selling yesterday? Where did we close yesterday? What's going on today? Assume we're going to go in the same direction, hit the sell button at some point, maybe when you get a reversal after it's pushed up, and hope it goes that way if there's no news. If there's news, steer clear of that. Or trade that, try and get into a position before it, put a break-even stop loss on, and hope the news goes your direction. But everything you do in trading, the odds are the same. Doesn't matter what your edge is. There's lots of edges you can find in the market. There's an edge in ADR. Yeah, ADR has an edge. Like this one, Euro odd today, perfect example. So the chances of it going beyond 150% of the average daily range are 12%. That means there's 88% chance it's not going to go further. So when you get to that level, there's an 88% chance it isn't going to do that, which gives you what? A 66% chance it's going to do that or that. Yeah, doesn't mean it's going to do that. It means when you get here, the odds of it going further are small. That doesn't mean it can't go sideways for the rest of the day. But if you get into a trade down here, when you get a signal to go long, there's a high probability of it working out. ADR is an edge, but edges will only play out when the fundamentals let the edge play out. So Euro odd here, this hit ADR because the CPI numbers from Germany were weak. So it's devalued to the euro. We've just had news that the US dollars had some decent news. Therefore, that has meant that they've piled loads of money into that today, which they need to draw out of something else. Coming out the odd in this case, which has rallied this. So it's, all strategies, scalping, have to be based on price movement, as far as I'm concerned. Technical indicators are good. There's a research site that you can look at, which gives you all sorts of information about statistics. There's lots of these research sites. They've come and gone, and they come and go all the time. Somebody sent me one the other day, and it gives you loads of statistics in a way that it's meant to give you an edge, but it only gives you the edge based on what's happened in the past, and what's happened in the past is based on fundamental data that has gone and never going to be repeated. So therefore, if you look at data and you say, give me a data view of 3 months on something, and it says, right, there's a 75% chance that will happen over the last 3 months. You extend that data to 6 months and it goes, there's a 65% chance that it would have happened over 6 months. You extend it to 5 years or 3 years or something. That edge, 90% of the time, vanishes. Because over a longer period of time, the fundamentals drive price up and down. If you're looking at tiny little time frames like this, you're trading all the algorithmic chop, which doesn't help you in any way, shape or form. So it's very hard, scalping strategies. But the only thing you can do is look at an edge. And the only edge you really have is what on average does price do on a daily basis. It goes up and it goes down. That's it. How far does it go up and down? You just measure the average daily range. Yeah. So when the market opens, it's either going to do that or that. It's going to close bull on the day. It's going to close bear on the day. You've got no way of determining which it's going to be. So if you go short at the open and it goes down and it ends as bear, well done. If you go short at the open and it goes up, you've got two choices. When it gets close to its average daily range, you can either scale in and hope it comes down before the end of the day, or you take a loss. Al Brooks scalps the 5-minute time frame. Everybody that sells a course scalps something, don't they? Al Brooks trades price action. But have you seen a P&L of him trading over a 1-year period, producing generous results over and over again? No. He sells books. He sells courses. He goes on tour. He gets paid £20,000 for every appearance. You know, I don't know what he gets paid. I'm making numbers up, but that's these people who publish all this information are great, knowledgeable people with a lot of stuff to share. And I don't get me wrong, I love Al Brooks, but show me a P&L. Yeah, I am an expert on Al Brooks. There's nothing you could teach me about Al Brooks. I've read his books over and over and over again. I know everything about all of his strategies. Yeah, and I've disproven them all with EA trading. I've disproven all the theories. Yet I've proven all the theories. And do you know why they're both proven and disproven? Because the odds are the same every time you press the button. The thing that makes a profitable trade is nothing to do with Al Brooks' strategies for reversals, his theory on distance moved and all of this sort of stuff. It's to do with when you press that button, where you place your stop loss and where you get out. The stop loss and the take profit are the things that make you the money. You can read a book, become an expert in price action, and you can look at any chart and go, there's that pattern, that pattern, that pattern, that pattern. It makes you really good at spotting patterns. It doesn't make you profitable. It means you can spot a, what was it somebody posted? It's pound US dollar. Yeah, you can spot a head and shoulders pattern really easily. Yeah. Now, how are you going to make money out of that? You're going to go short on the break of the neckline. So you are short now. Where's your stop loss? If it's there, there, or there, or there, will determine whether that's a profitable trade. Not the fact that you've identified that pattern. Yeah, everybody can show you how to do something and show you examples of, I can show you a perfect example of everything. I can show you today. Wow, look at that. Absolute textbook reversal alert at 150 ADR with high probability payout. Yeah, there's your exit in propulsion. It's reversing it in propulsion, so the next leg's going to start there. Textbook. Go and trade it. It's a different story altogether, isn't it? But the people that trade 5-minute time frames and make money out of them are very, very good at money management. Yeah. But they fully understand that they could flip a coin and get the same result. But they need a way to get into the market. So they make up systems which generate entry criteria. They don't make money because their system has generated an entry. They make money on how they manage the entry. Stock index hedge today. Why did I make the money I made today? Why did I make that profit? Because I exited there. Was it the right exit? Yes. Now let's look at the DAX. How did I make this money on the DAX today? Because I exited here. Was it the right exit? Yes and no. But I didn't make profit because I took an ORB or the EA took an ORB. I made profit because I closed my profit in profit. I closed the trade in profit. Yeah, the strategy I can teach you. Trading strategy, totally different kettle of fish. I could do a tour and teach SIH. I'd get paid loads of money to do the tour. I'd sell out. But if I trade this, and you see me trade this every day in here, I don't make money every day, do I? You have beautiful days and you have very, very bad days. The way the market works. It's consistency with the edge is how you make money, by doing the same thing over and over again every day. And if you take 10 days on the loss, you take 10 days of loss. It's just repeating. David, thank you for the $10. So I did see that come in earlier, but I was in the middle of a waffle. Good day, Goat. I'm a bit late. Traveling and trading. Good man. Are you trading on your mobile phone? Danger. Going to New York from Charlotte. Very nice. I want to go to New York. I've been to New York once. I went traveling for 10 months when I was younger, about 20 years ago. I say younger. And the last stop on our tour was New York. And because we'd spent all of our money by the time we got to New York, I could only spend literally 3 days there. So I crammed in as much as I could into 3 days, but I haven't been back since. Love to, but congratulations. Thank you very much for the $10. Very much appreciated. You helped me master the markets, and the issue now is I don't have enough capital to go full time. That you can build. 5-minute time frames is a fantastic way of building capital. Low time frame trading. So everything you do in the markets is fractal. Yeah. So what you see playing out on M5 plays out on M1. Yeah. Market reversal alerts happen. The same patterns happen on all time frames. So if you reduce the time frame, you increase the number of entries. However, the accuracy of the entries drops off dramatically the lower the time frame you go. So you can increase risk, you can reduce time frame, and that helps you build capital faster, but it puts more risk on the table. Nobody ever, well, say ever, I don't know, but there is no course I have ever done over my time trading that's ever told me in the course how much money you need to be a trader. Think about it. I don't know if any of you have done a course that's told you this, but I tell everybody up front, you're going to make roughly 10% on average a month doing this if you want to do it consistently. Therefore, if you want to earn $5,000 a month, you need a minimum of 50K to trade with. If you haven't got 50K to trade with and you want to make $5,000 a month, go and work at McDonald's, become a manager, because you're not going to do it trading. That's the realistic view, isn't it? You're not going to be able to do that. If you want to make 50 grand a year as a trader, you're going to need to produce 4 grand in profit. If you can produce 10% a month, you need 40 grand in your account. And that is assuming you have a good year. If you have a bad year, it's not going to go that well, is it? For me, I want 100K, yeah. 50 to 100K is a decent amount to be able to do this for a living. But even then, it's hard work, yeah? It's not, you know, all these people, this is the trouble. Everybody's jumped on the prop. The last 3-4 years, everybody's jumped on prop. And this is really killed the outlook of trading for me, because everybody is literally trading 5-minute time frames. They're scalping all the time. It's not consistent. It's got an edge long term, but prop is not long term, is it? Because you've got a drawdown limit. I noticed the other day, Top Step, is it Top Step or FTMO? One of them's just removed their daily loss limit, so they are now overall loss limit only, meaning that you can on day one get into a trade and hope you can scale into a massive winner. So they've removed the daily loss limit, so you have an unlimited daily loss up to the maximum loss, which is usually 10%, isn't it? So they're just encouraging more of this bad behavior. But anyway, Top Step, is it? Yeah. Which is fine, but you know, it's just their reasoning is always on the side of the trader. We've made it easier for you to make your strategy more flexible, i.e. put more risk on. What's that going to do? Blow your account faster. There's a guy the other day that contacted me who's got 10 Top Step accounts going. You can only have one at a time, I think. His whole premise was he's got 10 accounts. That's 10, not 5. He's got 10 accounts, and basically he's going to get one of them over the line. Yeah, so he's fully prepared to lose them, and he's using different strategies on each one. He's just hoping one of them gets over the line so he can use it to get paid. My question was, what are you going to do with the one when you get it over the line? Which of the 10 strategies are you going to use? The one that passed? Because that just had a lucky run. No answer. You should... It's all promoting gambling. All of it, isn't it? I can't think of any way to be long-term profitable that doesn't involve adding to losing trades. That's why it's not more common. Is everyone just losing in trading? Yeah, they are. It's published on the websites, look. No, you need to go to a European broker like Axie. Yeah, it's published on every broker's website in the Europe. It's published at the top. Look, the statistics of losing traders. That's low. That's really low. That's just about 70%. That's a low one. People with Axie are good. Do you know why people with Axie are good? Because they have much better trading conditions than most other brokers out there. So they attract more profitable professional traders. So therefore, less of them lose money. But most of them you will find it's above 70, 75%. And you know these statistics that they have to publish, they have to update them on a regular basis, which is great because they can manipulate this figure. It's going to be way higher than that, of people that actually lose, because this is just looking at the last 3 months. So if you've got an account which you've managed to run up for 3 months or 4 months and then you've blown it because you've done something stupid, you're not included in the statistic. Rigged. It's all rigged. Right. Let me just have a quick look at this US. So more strength coming into the US again in the last hour. Really good to push. So gutted I got out of that yesterday, but I needed to reduce exposure. Euro. Can't really tell what's going on in the euro. Not particularly strong. US dollar Swiss 125. So again, there you go. US dollar Swiss, an opportunity there. So first reversal alert of the day is going to be here. So that was the last down candle before that high. Sorry, before that high was made. So that was the previous reversal alert. Now we've had the little pullback. Yeah, it's invalidated. So this is your reversal today. But this US dollar's really taking off. They're trying to get out of basically a lot of this positioning before September the 18th. So I think we're probably going to see a sustained run in the US unless we get any hurdles in news for the next sort of week, hopefully. So, but you've got a reversal opportunity coming up intraday. Obviously, that way may well be the continued movement. There's an interesting strategy as well, just talking about strategies. On the 15-minute time frame that I also came across, which I've tested and again couldn't make it work, but using so the way that I've always used RSI is as a condition indicator. So when we get above there, it means price is pushed. We know that. So it's just an indicator that you can use to show you the condition in the market has been met, which is being stretched. I came across a strategy which uses a similar sort of theory, but intraday using 15-minute time frames. And what it basically does is instead of being above that level, i.e. just getting above it and then waiting for a signal to short it, you have to be above it for a set period of time. So the way that you do that is obviously, here's oh, look at this perfect example. There you go. There you go. So that is the candle that got extended above the RSI using the 70 level here. And as you can see, we're embedded. Remember, I keep talking about being extended and embedded. Yeah. So this theory works on that embedded theory, if you like. So you have to be above that level for a minimum of X candles. So the strategy was using on average 5 candles. So that's the candle, first of all, that got you extended. Then you had candle 2, candle 3, candle 4, and candle 5, all extended above that level, meaning that the market is pushed and is accumulating above the level, or it is pushed and continuing to push above that level. So we're not only extended and stretched, we are extended and stretched and not mean reverting. Yeah. So one of two things is then going to happen. It's either going to continue as it is today, or it's going to accumulate and then it will probably die down. So what you do is, instead of waiting for a signal above there or waiting for the condition to be above there, use it also as a signal indicator. So it has to be above here for 5 candles. And then as soon as it drops down below, i.e. it opens above and closes below that 70 level, that is your entry. So it's basically the aeroplane stalling out. And then as soon as it starts to come down, that's when you take it. So in our case, we would use a reversal alert or a moving average cross, or you could just, what they do is they use that as the signal. Interesting. So me being me, built an EA to backtest it. Very similar results to just having the condition met, because obviously the odds are 50-50 of that trade working out. You just get a hell of a lot less signals. So you would have missed that one. You'd have missed that one. You would have taken that one there, and that one wouldn't have worked out. So you got a win, and a loss. But over the last 2 days, that strategy is only in one trade at the moment, and it will be getting in shortly. Whether that works or not, you can obviously wait and see. But interesting strategy. But the advantage, the edge, if you like, is no different to trading a multi-time frame approach with a normal RSI strategy that I found anyway in my testing. So I just thought there's another example there. Look. So that candle there, this is on the hourly time frame, but that candle there got extended. We had 1, 2, 3, 4, 5. Yeah. So that candle there is the one that you would have gone long on. But again, talking about how to make money, that going below that level and then pushing up above that level and you placing the entry there isn't what makes you money. That triggers you to press the button. How now you deal with that situation and that trade is up to you, and whether or not you make money. So the person that enters here uses a stop below that candle and goes for a 2R, had a profitable trade. The person that enters on that candle and puts a stop below the low and targets a 2R has stopped out. The signal has nothing to do with making money in the market. The signal tells you to get in. The person that used a different risk profile and different risk management was the one that made and lost money. Again, that's talking about Al Brooks, absolute master in reading price action, trading 5-minute charts, any time frame you want. Price action is the same. It's a bullish engulfing, a bearish engulfing, a 3-bar reversal, a hammer, or a shooting star. It's just price action, isn't it? And theories about price movement. But making money isn't time frame specific. Making money is risk reward specific. Anyway, we're off on a tangent today, aren't we? I'm just talking about absolute waffle. Recently been taking fewer positions but trying to hold them longer. So you're holding EU and GU, yeah, and you're being rewarded for that. Like I said, we know where price goes. Yeah. This is why we have this indicator on our chart. Yeah, we know where price goes. When it puts in a propulsion move, virtually all the time, it comes back to the propulsion move. Yeah. Unless there is a fundamental shift, which means that the market will not have enough to get there. If that happens, you will tend to get a squeeze or a rally, in which case you will have multiple propulsion moves put in along the way. Eventually, when that squeeze ends, it will come back and it will test the areas where the last lot of buyers were, and they will either get overwhelmed or they won't. So I got out here, and I always tend to get out at the closest propulsion gap. So you look at my pound US dollar trade. Yeah. It's a bit difficult. This one's a little bit of an anomaly because of the amount of propulsion gaps we've got. But that is the last news. So assuming that we break that propulsion move, that and that together, those two propulsion gaps are the break of that high. That would be my downside target. Yeah. However, I've done drawdown control on this one already. But that is where I'd expect to go as a very bare minimum. And what is that? It's a fib level. It's actually just above it, but 38 retracement. Yeah, so it's your shallow pullback, your medium pullback, your deep pullback. Yeah, whether you use fib, whether you use propulsion gaps, whatever you use, holding your trades is very simple if you just target where you know price is going to go. You don't know where price is going to go. It could go here, it could go here, it could go here, it could go here. It could fill the propulsion gap and blow, which is why I got out of Euro US dollar yesterday. The only reason I got out of Euro US dollar yesterday was because I had a decent amount of profit on it because I had an aggressive drawdown control position on it. Yeah. And I had a bit too much exposure on the US, therefore I needed to get rid of some. But that was my decision based on my portfolio. Your portfolio will be different. New Zealand dollar, Swiss, ADR, Swiss franc on the move. So holding trades is all about just changing that TP level to the next propulsion below your average. Yeah. So just if you do that, you will hold your trades longer. But getting scared by that, like here yesterday, see where I got out of the pound US dollar yesterday? I got out because that's where they bought it from after the news. That's where they bought it. 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 We hit it. We bought it. I got out because I see all of this happening. If I'd got back from London, not at 7 o'clock last night, but at 10 o'clock last night, I wouldn't have closed that trade. And today I'd have been sitting in a bit more drawdown on it, and I'd have made a lot more money today. But I probably would have closed it out in the same point today because of that bounce there. But that is why you exit, because you look at a chart. Looking at your charts is why you exit your positions, not because of any other reason. Yeah. So if you don't want to exit your positions too early, do that. If you can't see it, you can't exit. The amount of times you will, you will make money, more money because you're not looking at the charts will way outweigh the amount of times that you will get out too early because you are. My biggest trades are when I'm not at my charts because the price just goes to where I want it to go to. But obviously, I'm looking at charts all day. So, afternoon, noob. I'm trying to hold those trades that are extended on the daily time frame. Yeah, if you look at the, I mean, again, if you want to make it easier on yourself, if you find that you have a problem with exiting too soon, which most traders do because you've got money on the table, go up a time frame. And then these 4-hour candles, yeah, so today we've had no reason whatsoever to exit. We've had a bear candle followed by a bear candle followed by a current bear candle. There's absolutely no reason to get out of any shorts. Drop down, you had a whacking great wick followed by a bull candle. That will scare a lot of people. Other people who know Al Brooks' work will be saying, but that's just an inside bar, it's indecision. That doesn't mean that it's going bull. It just means that we've run out of sellers temporarily, but the buyers haven't taken control of the market. So the next candle, I'll wait and see what validation I get. And Al Brooks would have turned around and go, well, you've got a lower low and a lower high. That's bearish price action. Again, no reason to exit. We'll wait for the next candle, a lower low and a lower high. Again, bearish price action. Excellent. So I'll carry on with my trade. But if you don't want to read price action on an hourly time frame, the 4-hour will smooth it all out for you and tell you that there's no reason to exit. And again, daily. Euro, US dollar, 125 ADR. Yeah, daily time frames is where most of the money is made in institutional trading because there is no chop. Where are we going? We're bullish. We're bullish. We're bullish. If you've got longs on, there's absolutely no reason to exit the market until there. There's your first warning sign that we're running out of steam. We managed to make a new high. Excellent. We'll give it another day, but we're going to watch that level, which was broken the following day with a massive bear candle. Exit. As soon as the institutions exit, the rest of the institutions see sell volume coming in and they exit. Sell volume entices sellers, which enter the market short, which is why the market moves in market structure. It's just bank and institutional movement based on what's happening. As long as this thing's going up, you keep buying it until it starts to come down, and then you flip your longs into shorts and take it the other direction. It's very, very simple under the hood. We make it super complicated by placing thousands of indicators and stuff on our charts, whereas really what you want to look at is where are the orders? Where's it going? It's been up. Where's it going? It's definitely going there. In fact, I think probably if we replay this next Thursday, we'll be there. Yeah. But where's it going when it gets there? Don't know. Because the fundamentals will have shifted next week to be different to this week. And the bias from the banks and institutions will be different next week to this week, which is why intraday trading is so incredibly hard. You are trading the chop of directional change constantly, and it's just algorithmic. Entering on those time frames is no problem, but analysis has got to be done up here if you're going to survive, because down here your analysis is literally a coin flip. There's a statistic on bullish and bearish engulfings, which is 51-49. If you look at any period of time over any time frame over any period of time and look at bullish and bearish engulfing statistics, i.e. when you get a bullish engulfing, again, talking Al Brooks stuff, price action. When you get a bearish engulfing, there is a statistical edge that you can create using that. But when you get that bearish engulfing, how do you analyze that statistical edge? You've got to have an outcome. So every time you get that, you place a stop at some point. Is it on the high? Is it there? Is it X% above there? What are you basing the X% on? Number of pips, ADR, ATR on this time frame, or what? What are you going to base that on? And what have you got to get out of it to make it a statistical pass? Yeah, this is where all data analysis goes out the window, because someone will write a book and say every time you get a bearish engulfing, the success rate is 75%. What they're saying is after a bearish engulfing, the chances are the next candle will be a bear candle. Yeah, that's fine. There you go. We've made X number of pips. But if the success rate is 70% on a bearish candle following a bearish engulfing, when you get it wrong, it could be 3 times higher than the profit you make. So the statistical edge might be a beautiful 75%, but if you trade it, you're going to make a loss because your profit is tiny and your loss is huge. Yeah, this is what I mean when you watch things and read things about, theory. It's all well and good how market moves. I've got a theory about market movement, price action, extension, stretch, elastic band theory, profit taking in the banks. It doesn't help me in any shape or form, as you've seen, predict when price is going to move. I know how it's going to move, but price timing, prediction, distance is impossible to predict. You can't do it, can you? RSI2 should be doing good. In this environment, not in this environment. RSI2, I've turned it off basically because it's not doing well at all. There you go. So you have to ignore the percentages. It's not trading with proper risk. It's trading basically a set amount every day, regardless of what the account size is, to give me an idea of the statistical edge, if you like. The numbers basically on percentages on working and not working. Money's not what this is testing. But it made a lovely profit, and now it's made a whacking great loss. Why? Because of this. The movement we've had here and the size of this movement, akin to that US dollar yen intervention move, we haven't had it for 10 or 20 years. I only back tested it for 10 years. This is new. We haven't seen this, and it doesn't survive this. In the same way as if we tested something pre-COVID when you got to COVID, it would have failed in COVID. Yeah. So it's not doing well at all in this with these individual settings. However, if you use different settings to the settings that I'm using here, you'll get a different result. Again, RSI2 is the entry method. The money or the loss is made based on what you do with this risk. If you'd have had half the risk, you'd have had half the loss, but you would have achieved the same profit. But yeah, no, it's not doing well in this at all. I've closed out some today. I'm just gradually closing these out. I just wanted to see what they were going to do. But yeah, no, it's not doing well at all. But the back testing on that particular strategy, because I did the video on it, was fantastic across all instruments using robustness testing. But it was all done, all the analysis was done. When did I release the video? It was a month ago. So released that video a month ago. Yeah, so roughly end of July. Pound US dollar prime example. Yeah, that's the price action going back. You know, we've had some big months there, but look at the big pullbacks we've had there. Parabolic. Haven't tested it over a period of parabolic movement like this because it hasn't happened. Doesn't survive this, that particular strategy. There are variations which will survive that, but that's not the one I'm testing. Forward test. I'm forward testing the one that got a decent profit with a decent drawdown, but couldn't test it over this type of market condition. Yeah. Remember these RSI levels, yeah? Scroll out on the chart. Yeah, so where we are here now, last time we were here was here, which is 2017. In COVID, there's your 10 level, so that's the 90 roughly. So yeah, go in COVID, this move that we've had, although it's smaller in strength terms, is akin to that. So, you know, I was testing from 2014 to 2024. We had a run up there where it would have made a loss. But the rest of the time, we haven't had that type of scenario. But, you know, you can't test for conditions, which is why back testing is only as good as the data that it's been tested on. Which is why I say it's all about risk management. Position trading, yeah, we've had a very rocky year so far, position trading. The reason we've had a rocky year is because we've had parabolic moves we've not seen before, because we've never gone through an interest rate freeze, which has turned into an interest rate dip before, following an interest rate rally before, following a pandemic. Yeah, you can't test for that scenario. So, you know, it's just one of those things. But yeah, I would have said RSI2 would have been pretty good during these conditions, but certain instruments have, I mean, you look at normal RSI movement and then you look at this embedment and the speed of movement and embedment there. Yeah, that pattern, I mean, there's a little bit there, but doesn't really appear in the past. It's normally more fluid. That's not, is it? So nothing you can do. RSI2 level got up to 99.95. We were using 90-10 because it was extreme. Not extreme anymore, is it? Just crazy moves. But this is why we forward test. And luckily, forward testing at exactly the right time. One question about the reversal alerts EA. Set the basket settings that they should close all trades when they are 50 pips in profit. Only the trades with TPs. It doesn't use TPs. I don't know. You'd have to post it in the Telegram group. I can't see your settings. So it will close all the trades when the average of your trades is 50 pips in profit. Yeah. So you'll be able to see on your dashboard how many pips in profit it is. It will close them out when it's 50 pips in profit. But it's the average of all of your trades. So it's got to be 50 pips below that line. So all positions at once. Put it in the back tester and test it. If it does it in the back tester, it will do it live. If it doesn't do it live, you've got a magic number conflict or something else going on. Whatever it does in the strategy tester, it will do live, assuming you haven't got a magic number conflict. But I mean, if you want to post your settings, you can do, but test them yourself first. If they work in this, all I'm going to do if you send me your set file is I'm going to stick it in the strategy tester and test it. If it does what it does, I'll send it back and say, there you go, it works. If it doesn't work, there's something in your terminal that's stopping it working, which is 99.9% of the time, it's a magic number conflict. But send me your test first and show me your test is not working in the tester, because I'm going to test it. If I test it and it works, I'm going to come back and say it works. So before you send me it, test it yourself. Don't make me do the work for you. You do it. I'll confirm it for you. I was going to go through all the RSIs, but I've been waffling. The 4-hour RSIs we've got are Euro odd. I will quickly go through them, which is just starting to reverse now, 4-hour. So lovely move down and push up. So I've got 2 positions on that at the moment. Average is here. So just looking for a pullback on that leg to exit. Haven't got a target on that. Got a target on that. So targeting that propulsion there. So the Euro odd, big extension. Euro CAD also extended on the 4-hour. That's extended and embedded as well. So we've just had a reversal alert going on that, but it's like one of those, that's off the back of that weird move we had in on that Monday, which was 300 ADR in 2 hours. So we just had the reversal on that, which is based on the Euro weakness off of the CPI numbers for Germany, and it's based off the US strength, which has rallied the CAD, pushing down into that low, which they're buying back up at the moment. So very good looking long opportunity there. You've got a big extension on the Euro New Zealand as well. So I've got 3 longs on that one at the moment. So again, good example of moving your targets. Yeah. So that is where I was initially targeting, top of that propulsion gap with the first order, which was taken there. We've just collapsed this week so far. So second entry taken here, third entry's just gone in today down here. So my new average is there. So target is going to be moved down just under that low, which is the low of last week. So we sold that propulsion move twice, broke down through the low of last week. So I'm looking for them to come and test the low of last week. If they're going to continue, that's where they'll probably sell from. If they break above that low, you'll find limit orders triggering there. But that is plenty of profit, and it's the closer version. So target up there. Again, depending on where your average is, obviously everybody's going to be different. Yeah, you might have an average price when my average price is there. Your average price might be there, for example, in which case then that propulsion gap there would be a better target for you, closer target, easier to achieve, and still profitable. But you know, everybody's going to have slightly different trades because you're going to get into positions at slightly different times, obviously. So that's nicely extended to the downside. Massive extension that is. Whoops. Screwed up the charts. So again, look, this Euro New Zealand level that we've got here, we're going back to 2023 here. So this is roughly a year, just over a year. Yeah, we haven't been down here. That is the lowest extension we've had. Prior was that there. You know, these moves that we're seeing coming in at the moment are so much stronger than we've just had in the past. Yeah, the market really has kicked in this summer, funnily enough. But remember what I said, if you go back and watch the beginning of the stream, beginning of the month stream, back in at the end of July, early August, I said, this month, one of two things happen. It either is like this, and there's hardly any movement because it's summer trading, there's low liquidity, low volume, low orders going through, or we get stupid strong movement, which is just going mental because there is low volume in the market and you get super slippage. Yeah, these moves are just parabolic because it's just slipping. When they want to place large orders, they've got to reach so much further to get them filled at the moment. And we've got big things going on we haven't seen. New Zealand changed their interest rate without telling anybody. You know, obviously we've got the Euro news today, which has obviously driven this a little bit further, but it's mainly based off of that. So, but really good extension, beautiful propulsion gap fill. Again, keep going on about propulsion gaps over and over and over again. All the market does is move from propulsion to propulsion, turning them grey. Yeah, everybody up here shorting. Head and shoulders, look at that, one that worked. Woohoo! There's your short. If your stop was there, brilliant. If your stop was above the right shoulder, which is how most people teach it, you haven't even got 1R yet. You've been holding it for 2 weeks. Okay, so that's a good looking long. And pound New Zealand as well, which I'm also in. First entry taken on that one today. I've moved this one to break even. So first entry taken on this one. So this was a nice extension with first entry literally gone in off the back of this drop today. But I've moved this to break even because I've got a little bit too much exposure on the New Zealand dollar. So I'm happy to just grab a quick profit targeting that 3-week low, which is that propulsion gap there. If it gets there, fantastic, $600 or something. So yeah, $600 odd. However, I don't really want to hold any more exposure on the New Zealand dollar, so I've just moved it to break even. This propulsion gap, I think, is going to get tested. So I think probably there's a good chance of taking a second entry at that level there. Once they complete this propulsion move, which would be my second entry. But again, I just don't want to risk a move of like, that's going to be about 400 ADR if that does fail and drop. So if Bailey comes out and says, yeah, Euro's dropping the interest rates, and that is probably what will happen. If Euro drop interest rates, we will be inclined to do the same. So if Euro drop interest rates, which it looks more likely off the CPI number for Germany today, it's all going to start to come down for the pound. And I don't want to get into the position where obviously I'm just overexposed on the New Zealand dollar, really. So those are all your extensions. There we go. I am happy I chose not to trade Euro New Zealand. It's the only pair beside the Swiss and the yen that didn't go well in the strategy tester. Yes, but like I just said, they didn't go well in the strategy tester. What's that got to do with anything? Yeah. If the Euro New Zealand didn't go well in the strategy tester in the past, does that mean the future? It means it's going to be a bad thing to trade? No, it just means in the past, whatever strategy you have selected to trade, those selected criteria of inputs generated an unfavorable result. That has nothing to do with the result that will be achieved with those variables over the next 6 months at all. But this is the problem with trading, isn't it? It doesn't matter how many back tests you run. And the RSI2 strategies that I developed and back tested, I robustness tested it. I tested it to death. I showed you the results of me developing it over weeks in here. And I did 10 years worth of back testing across every single instrument using thousands of robustness tests on every instrument, and they all came out as they all looked pretty good. We went parabolic. Doesn't work in parabolic markets. So the day you launch it, goes wrong. True, but the confidence is important. Yeah, but it's not giving you confidence, is it? It's telling you not to trade something, which could well be the most profitable thing that happens this year. This is the thing, you know, all these moves that you have, that you see play out in a strategy tester, are happening very, 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 very quick. Yeah, that result, you do a 10-year back test, you get the results out in, you know, 30 seconds, a couple of minutes, and you go, wow, that's amazing. It's 10 years worth of trading. I've only been trading 16 years. 2/3 of the time I've been trading, I've just tested in 1.5 minutes and gone, wow, that's brilliant. I'm going to use that. That's where it all goes wrong. You can't rely on that because it's not going to happen again. That 10 years worth of testing went pre-COVID, after the drop in 2016, into COVID, survived all of that, went through the biggest rally and dump we've ever seen in the S&P 500, which affected every market on the planet. And we are now going into, and that then followed the biggest interest rate rally and freeze we've ever seen. Now we're going in interest rate drop. That is the best robustness test I think you could ever do. 4 years pre-COVID and 4 years post-COVID. If any strategy survives that, it's highly likely to survive anything. It survived the collapses and the big volatilities of the 2016, 2017 into COVID and the interest rate rally, interest rate dump and pandemic. However, all of my robustness testing said it was good, and it's failed for the last month. So just don't place too much emphasis on backtesting results. What you should use it for is to show you the outcome of doing things. If I put my trades half an ADR apart, what outcome does it have? Well, all the tests produced very large drawdown. If I space my trades 1 ADR apart, what is the outcome? Drawdown was reduced by 75%. As a trader, am I happy with large drawdown? Am I aggressive? Or am I conservative and don't want it? Yeah. The back testing will show you the impact of how you trade, not the results you're going to achieve. Yeah. So if spacing, which we know, spacing distance reduces drawdown, that's what you should get out of the test. Not, I shouldn't be trading a specific instrument because it didn't pass the test. Yeah. You won't do the same thing as the test. You would never have done those things. First of all, if you're following exposure rules, you wouldn't have taken all of those trades, would you? Second, you probably would have been scared out of positions sooner. Or a news event that caused a massive drawdown on the account, you would have closed the positions or protected them ahead of the news event. So you'll never achieve that. But it helps you determine what happens. If I get in with all of my trades with a 0.1 lot size and I do the same test with a 0.03 lot size, what is the result? More profit, more drawdown. Okay, so where do I want to put my first trades? That's what you use backtesting for, to give you robustness in the fact that I could use 2, 3, 4, 5, or 6, and it will survive. Which of them do I pick? Which one's giving me the bigger drawdown or the bigger profit, or whatever the criteria you're testing for? But the result is never going to happen. Unless you do take every trade, which is, if you take every trade on every pair, obviously you're going to overexpose yourself. Therefore, you want to reduce your risk. And somebody's doing that at the moment, aren't they? They're trading everything. But as I said, at some point, I think that might well get into very large trouble. But you never know. Right, I'll leave it there today. So if you've been trading the indices, well done. Hopefully, if you're trading SIH or ORB, today has been absolutely beautiful. So profit everywhere today. Just profit. Lovely. And S&P is the only one that wouldn't have worked today. But if you're watching the NAS, as I did with the FTSE this morning, exiting the shorts is the thing to do. But we're 150 ADR on that now. Up at the highs, look. So beautiful rejection going on. 3-bar reversal. 5-minute 3-bar reversal at yesterday's high. Push, pause, pull. Limit order triggers. A lot of people watching that level. Banks, institutions included. It's also the previous day's high. So previous day's high and yesterday's high, and the propulsion move from the open in New York the day before. Good short opportunity. Right, I'll leave it there. Anything you need, let me know. I'll be in Telegram or Discord. Tomorrow I'm back. I need to look into why this isn't updating properly. I mean, why is that not updating? Tomorrow I'm back in the morning, 7:45 tomorrow morning. We will trade the DAX and FTSE at the open. We'll have a look at the news for the day as usual, and obviously have a look at what's happened this week. I didn't cover the got oil output cuts coming from Iraq as well. I didn't cover the news overnight today or from yesterday. There wasn't an awful lot in there, as you can see. So we'll look at obviously the news as well overnight, but there wasn't a lot today, which is why I didn't go through it. And then obviously we'll see how we get on tomorrow morning. But hopefully another profitable day like today. All right, so anything you need, let me know. I'll be in Telegram or Discord. Other than that, I will see you guys next session. Have a good one.